Welcome back. We are coming to you live this morning from the Milken Global Conference here in Los Angeles. One of the key themes, the state of the global economy and markets. Investing today. Futures this morning pointing to a higher kickoff to the week. Dow Industrial is expected to be up about 100 points right out of the gate this morning. The NASDAQ is up 26. The Wall Street Journal this morning highlighting the recent strength of the dollar. Joining me now from the Milken Global Conference in L.A. is Alaska Permanent Fund Corporation Chief Investment Officer Russell Reed. Russell, good to see you.
Great to be here, Maria.
Thank you so much for joining us. So what's your take on the backdrop for investing today? And that includes earnings, economic strength. Your take?
Well, we've had such a terrific run with U.S. stocks and international stocks by extension over the past 20 months. But in the last 3 months, we've had a very different story, and that has been a range-bound story, irrespective of volatility that we've seen, which has been high on a day-to-day basis. We've really been range-bound since the beginning of the year, and that's what we think the backdrop is for the investment environment over the next 12 to 24 months.
So you're talking about not a lot of movement for the stock market. Maybe we'll have volatility, but at the end of the day, just in a range, this market will trade, is what you're expecting.
So we have a number of battles that are going on effectively. One is that we've had better earnings over the past quarter. However, that's against the backdrop of also higher interest rates. So higher earnings good, higher interest rates not good for valuations on stocks.
What's the biggest risk to this market right now, Russell?
Well, I'd say that what we had was all the good news was built into the markets. We had high PE ratios between 19 and 20. That's dropped to around 16. So in some ways, the stock market is less vulnerable, we think, to a big correction.
Okay.
So the less chance of a correction, but more of a chance of a sideways market.
I asked you because some people feel like the biggest risk to the market right now is the Fed and whether or not they're going to make a big mistake and raise rates too many times or mess up on the unwinding of the balance sheet. But you actually have teamed up with another wealth fund to create an emerging markets opportunity, an emerging markets equity fund. It will trade both on the New York Stock Exchange and the Abu Dhabi Securities Exchange. This fund will be centrally focused on investing in high growth, high population markets. So you are looking to have outsized returns in the emerging markets, even if you do have a range bound in the U.S. Is that right?
We really take the emerging markets seriously, and this is really quite a contrast to what I experienced early in my career. Before the year 2000, the best advice for institutional investors was to stay away from the emerging markets. High volatility, lower growth than the developed markets. That's changed over the past decade and a half. So what we've done more recently is launch, as of last week, the Miaza Stock Fund, Middle East, Africa, South Asia Stock Fund, to invest in economies from India through South Africa and Morocco, which are growing at a pace of about 3 times that of the OECD.
Wow. So you're talking about 20% growth or what? More than that? In terms of some of these companies growing 3 times of the OECD.
So the economies themselves. So economies between 5 and 10%
I gotcha.
Across the region.
And are you doing this through individual companies in that fund or ETFs, or what's in the fund?
So the fund invests in publicly traded stocks. And what's interesting about it is that many of these countries and stocks have not been invested in by foreigners, or at least those from the industrialized world before. So we're looking to open up markets that haven't been opened before, and that's particularly interesting. People are aware of investing in places like South Africa or India, but they're not as used to investing in other high-growth markets, including Saudi Arabia or countries in East Africa. So opening up those markets for the first time, we think, is particularly interesting as an economic opportunity, as a financial opportunity, and this is what we're doing in the public markets for equities, but we're looking to have an emerging market strategy overall across our asset classes.
All right, we will be watching. That's great insights. If you're seeing a quiet market in the U.S., you certainly see opportunity elsewhere, particularly in emerging markets. Russell, it's good to see you.
Great to be here, Maria.
Thank you so much for joining us. Russell Reed there.